Hey there, happy Profit First Allocation Day. Today I wanted to talk about taxes because I am constantly getting this wrong. I hate everything about taxes. So if you're anything like me and you hate it, this could be helpful for you because we're going to try to make it a little bit easier as far as Profit First, your tax account, and becoming an S-Corp question mark. So I always have struggled with this. I continue to have a lot of questions around it. So I just decided I'm going to sit down with my Profit First professional and a tax advisor, Linda Stapf from Stapf Financial. And I'm going to just ask a bunch of my questions around Profit First taxes and becoming an S-Corp. I figured if I'm struggling with it, maybe someone out there is also struggling with it. If you're a business consultant or a marketing agency and you struggle with putting the right amount of taxes into your tax account, or being afraid because you can end up in legal situations, losing your business, people losing their jobs, or just really having to take on some debt and do payment schedules with the IRS, which no one wants if you don't get it right. So I figured my conversation, asking for advice from my Profit First professional, might help some of you out there get your tax account with Profit First and becoming an S-Corp a little more clear in your mind, and maybe make it a little bit easier for you to make those allocations, know when you can take them out, what you can use them for, and maybe just some advice around what are key indicators that you might want to become an S-Corp. It's not for everyone. There are some drawbacks, and there's that pesky little pay yourself a reasonable rate. I hate it when the government says reasonable rate on anything, because according to whom? And so Linda Stapf is here to give us a little bit more explanation around what that means and what that can look like for you, because apparently it can vary. So I sat down with Linda, had a great conversation with her, and just figured if I need that advice, maybe one of you guys do too. So here is my interview with Linda around Profit First tax accounts and becoming an S-Corp. Hope you enjoy. Bye. Just talking about Profit First for a minute. Curious about if you could tell us, for most small businesses, maybe it's in, and maybe you could give us some revenue categories for it, but S-Corp versus not. How do you feel about that? What do you normally advise? Can you give general advice around that?
Generally, I don't like to do it unless I've got $250,000-ish in revenue. I do have some businesses that are smaller than that. And there might be factors that play into that a little bit. Different benefits that we're kind of looking for, or they've got a job and this is a side business for them. So there may be cases like that. But because you're looking at filing extra tax returns, you're looking at filing payroll reports, you're adding a substantial amount to your small business administrative upkeep and cost. So it's
by filing as an S-Corp.
By filing an extra tax return and having to do payroll and all those things that kind of go with that. And it adds $2,500 easily to just your administrative stuff. Plus there's just more work.
Okay, so after you reach the $250,000 in revenue mark, it might make more sense.
It might make more sense. You're looking at, and we're looking at real revenue too.
Right.
So you want to kind of pay attention to that real revenue number. In other words, the number after your direct costs are paid. Because if I have a $250,000 business, but they're spending $150,000 on direct cost, then I have a much smaller business that I'm working with.
What you mean by that direct cost? You're talking about subcontractors and or cost of goods sold.
Things that you need to spend to create the income directly. So you sold something for $1,000 to somebody and you have to spend $500 to create it with a subcontractor or materials to make that work. So your real revenue to the business is 500, and we start with that number when we're doing Profit First. I also look at that number when I'm looking at what tax entity I want you in. Because I don't want you to incur more costs than you're going to get out of tax benefit.
Right. Okay, so when we talked about going S-Corp for this business, one of
Mhm.
the things that I said that you were like, wait, it doesn't have to work that way, was that I had to pay myself a salary. And if my income wasn't steady and reliable, how could I make that happen?
You can pay yourself a salary or you can pay yourself a variable salary. I was talking to someone this morning and we're looking at doing an S-Corp next year. He's concerned because he's investing some money in fixed assets that he's not going to be able to fund a regular salary. So we're going to step it. We're going to start with a smaller number and use distributions to kind of make that up. And we're just going to look at it on a quarterly basis, just like we would with the profit first percentages. And we might start with $1,000 a month. That might be what I start with him. He's growing to $1 million. So he has growth ideas also. And his business did hit that $300,000 mark. And this will make it easier for them going forward to get taxes paid. That was one thing that really sorted. When you have a paycheck, there are taxes that come out of it, and all of a sudden your taxes are paid instead of not paid.
Right.
That's a magical piece when you go from a Schedule C business to all of a sudden having a W-2. And now a good part, maybe not all, but probably 60 to 70% of your taxes are paid in that W-2.
Yeah, so 60 to 70% of your taxes are paid. So we're still contributing tax money into the tax account.
And you would, because you get paid back that. So that tax distribution is supposed to pay you back for those taxes. Plus you still have estimated tax payments to make.
Right.
So you need both those pieces being funded to take care of yourself as the owner.
Okay, so if we're not an S-Corp and maybe we don't have ourselves on payroll, then we need that 15%, 10%, whatever it is, whatever category we're in, going to taxes because we're making estimated payments. Maybe that's monthly, maybe that's quarterly, depending on how we have it set up.
Yep.
Once we become an S-Corp, we're funding that tax account, but we're also paying ourselves the operating account or our payroll account back every time that we pay payroll, which could be once a month, bi-weekly, whatever that is. And one of the questions that I asked you around that was, what taxes am I allowed to pull back out of my tax account and pay for with payroll? And correct me if I'm wrong, but it is the employer taxes for the whole payroll. So if you have someone else on your payroll, you're paying your employer portion.
For your piece. So not the employee piece.
Not the employee.
The employee piece that is sitting over there for your employee that you have is operating expense.
Right.
I typically only want your expenses for payroll. So I'll take your net check and your gross check. The difference between those two amounts, if you have no other payroll, is your piece, federal withholding, Social Security, state tax. And then the employer has a piece that I will add on to that. And I don't always, but most of the time I do add on to it, but I'm not doing the employee pieces. So not you, not the owner. Those come out of operating expenses. And we
right. So any taxes that are associated with the owner's pay, though, that comes out of the tax account. Where it gets tricky and the question mark comes in is the employee or employees, they pay a section of taxes that should not come out of your tax account.
Right.
And then you pay an employer portion of that taxes. And so the question is, does that part get paid out of your tax account or does it not get paid? That comes out of operating expense.
That's operating expense. Yeah. So I'm paying
only your taxes.
Yeah. And my employer match is 7.65 for FICA. So I'm taking 1,765 and putting that over into my payroll account. That should cover all my taxes for Joe.
Right.
And that's coming out of operating, and that's my allocation. When you get to that point, I do typically set up an allocation for payroll. So, and that doesn't include you. The owner's not in that payroll number. And I will take, 20% or whatever that number needs to be. And we take 20% of payroll and dump it over there. And that
and having you guys put my QuickBooks together, you actually have separate line items for my payroll and for the employees' payroll that are set up in QuickBooks. So it's quick report.
Mhm.
to say, this is the payroll that I moved from here, and this is the payroll I moved
Yeah.
from here. So it's
Yep.
not difficult.
Yeah, if you're doing the actual dollar amount, I personally, I use a percentage because I'm trying to keep my payroll at a certain percentage of
Right.
gross sales. So if I'm getting close and not having enough, I know we're not doing enough work or we're not billing enough or something's wrong, or too many employees.
So that's why you're putting, so sometimes a simplified version of profit first is you're just doing an operating expense account and putting payroll out of that. But you're saying if you have more than just yourself on payroll, you would like to see a separate account that's payroll. You want it funded as a percentage of revenue. And then you can start to see like, uh-oh, we're having pricing problems, we're having expense problems, something's happening here where we're constantly dipping past what the balance is in that payroll account to pay payroll.
Yeah.
So we're off kilter.
Yeah. And it makes it really clear. If it's
Yeah.
mixed in with your operating expenses, I don't know if it's you spent too much on something else
Mhm.
or you spent too much on payroll. If it's
Right.
payroll and it's in a separate account, you start to build a buffer or you start to decrease your balance, and you can see that very clearly. And payroll is typically the biggest cost. A lot of times for owners, it's one of the biggest costs in the business is payroll, getting people to do work.
Right.
And I like to make sure that I've taken care of that. For me, that was a huge difference when I set up a payroll account and started funding payroll.
Yeah.
I knew that I had my payroll handled for the next pay period. And there was nothing else that I bought in the business that would impact that account, just payroll.
Right.
Kind of keeps it sacred so your employees are taken care of.
Right.
They do
And
like to
also
eat.
it's right. And it's also an indication though for you to keep an eye on it. So you were talking about employees are a lot of times the biggest expense. Like for us, it can vary. It can be payroll or sometimes it's subcontractors, depending on what kind of work that we're getting done. So
Right.
watching those two line items, like this shouldn't go above this expense or else I've got a pricing problem.
Yes.
Payroll, I've got some sort of expense or pricing problem. We're not sure yet, but it's a key indication that something's gone awry. So you can course correct.
It says go look at it. Let's see
Right.
what's happening. If you're constantly short, go look at it. If you're building a big balance, that's great. You still might want to go look at it.
Right. Okay.
Yeah, and maybe an employee shifted to a subcontractor and that becomes more direct cost. And you're
Yeah.
using them instead of using them on a regular basis, you're using them just for the work
Specific
that you're putting
jobs.
out to clients. And that's no longer payroll. Payroll's regular recurring responsibilities that you have.
Right. All right. Cool. Those were a couple of quick questions I wanted to cover for marketing people who are trying to use profit first, to try to simplify the tax piece, because that's always a question that I get from people who are working on profit first. And they're like, how do you do this? And then the S-Corp piece, that's a big question. And typically the companies that I'm talking to are growing past that $250,000 real revenue mark. So it's a great time for them to consider doing an S-Corp, which I know you have a service that you offer where you do a deep dive tax piece for people for a small fee so that you can help them realize whether or not they need to do things like an S-Corp or set up a tax account, what percentage should be going in there. Tell us a little bit about that.
Yeah, that's specifically what that is for. It's to just get an idea when you're a new incoming client, get an idea of what your books look like, what your tax situation looks like, whether I can find some magic for you and save you some tax dollars, or if you're doing everything right and you don't need that up level. I would like to work with people who need help, want help, appreciate the help, and can work in a way that we work. So a lot of the stuff that we do is remote. We're doing, email and Zoom calls, and that's kind of where we're building our business for the future. So I'm testing out how comfortable you are with that, how responsive you are. You're testing out what it's like to work with me. And you get a chance to kind of figure that out and have conversations. And it's worked really well for the most part.
Well, and in the end, what they get from that, from what I've heard, because I've referred a lot of people, but in the end, what they get from that is a game plan, right?
Yeah.
Hey, no matter whether you continue working with Linda and team or not, you have a game plan going forward that you're
Yeah.
suggesting as a professional that they
Mhm.
should or should not be doing S-Corp, that they need this much money headed into their tax accounts, that they should be paying this much in estimated taxes on these dates. So they get a plan no matter what. They get value from that investment. And then a lot of times that leads to, okay, Linda, help do my books, do my taxes, help me, put me on profit first, all the things.
Yeah, we're trying to give them real value. I want to give them something that they can hold and use, whether they work with us or not,
Right.
going forward in the future. And it can be as simple as you need to put 22% in your tax account and you'll be safe. Your books look great, keep going. Or it could be as complicated as, yeah, I see 3 things that we need to fix on the last 3 years worth of tax returns and we can find money. And we give them a quote to fix those.
Yes. And I've heard that a lot too. Finding finding money from previous years. So
money, yeah.
So that's a possibility as well. All right. Well, thank you so much. And hopefully this helps people with taxes, tax questions, and setting up their tax accounts, and maybe setting up that payroll account too, especially if they have other people working for them. And you can find Linda and her team at stapffinancial.com. She can do an in-depth tax review for you. Just hit that schedule a consult button and you'll get in touch with her and her team.
Thanks.
Hey, thanks.